Okay, I'm glad I said that right. Of Mimo Capital.
You did. Thanks.
And Mark Trang from D3. Welcome, guys. So as we explore the transformative potential of tokenizing real-world assets, we're going to dive into how this technology is going to enhance liquidity, democratize access to investment opportunities, and reshape traditional financial systems. So before we start, I'm going to have our guests introduce themselves and what they're working on. Adrian, to you, please.
Hey everyone, my name is Adrian. I'm the CMO of Crutrade. So we tokenize wine and spirit, and we do B2C business as well as B2B. So we started it 2022, and we have made 50 million in revenue for the past 3 years. And we have a team of 70 people based in Italy, France, London, and everywhere. And now we are building an NFT marketplace for fine wine and spirit, so people can start to trade peer-to-peer. So yeah, very exciting, and we are launching in January, and we will share more details with you guys soon.
That sounds amazing.
Where's the wine?
At my hotel.
Amazing. My name's Claude, and even though I'm French, I'm not the one selling wine here today. I wish. I'm actually a certified sommelier, so I totally want to take you up on that offer. So we're also in the RWA business at Mimo. We are a licensed tokenizer in Europe, and what we ended up working with the most would be tokenization of things like yield from Bitcoin mines and AI data centers. We prefer this type of product because we started by tokenizing T-bills, didn't find the click with the market, and ended up going for higher yield assets with a different type of, different type of risk profile and different type of yield. So in terms of RWA, that's what we're doing. We're also working on different products, such as better distribution channels for RWA, like an AI wallet and stuff like that. But for the sake of this panel, this is what we're going to talk about. So yeah, RWA of higher yield assets like Bitcoin mines and AI data centers.
Hey everybody, Mark Trang, CMO from D3. Our mission is pretty simple: make domains great again, internet domains. So we're building the first blockchain for all internet domains in the world, both all the current ones, the .coms, the .xyzs, the .nets, and also we're the official partner for a number of top L1 and L2s to bring new TLDs to their communities. So in the future, you could have Adrian.doge, Claude could have Claude.near, Stan could have Stan.magic. Those are all TLDs that we're going to be enabling in the next 18 months. And then we recently closed a $25 million Series A. So we're excited to grow the team. So if folks want to come to California or Las Vegas and join our team, come talk to us.
And that's awesome. I just want to add that this guy is the best at coining short phrases like that, like make domain great again. He keeps making those things, and that's amazing.
Yeah, and my name is Stan Chen, and CEO of RecycleGO. And I am the only one who did not get the black memo today. So I am completely out of sync with my honored guests. RecycleGO has built a blockchain around carbon accounting and tracking sustainability metrics. So thank you very much. So let's get right into this. My first question for my guests. What do you think are the most promising real-world assets for tokenization in the near future? Obviously, Adrian, I'm going to throw this to you. Let's talk a little bit more about what you're doing in terms of basically wine and what your thoughts are.
Yeah, definitely the most interesting asset class is wine and spirit. By the way, I'm sober right now, so yeah.
Thanks for clarifying.
Yeah, I think it's I don't want to be very biased, wine and spirit, but also real estate as well. But for the sake of it, wine and spirit, we are actually tackling a lot of great challenges that the wine industry has been facing for so many decades. There are a lot of wine that are fake in the market right now, for real. And people are actually trading wine externally. They don't know where their wines are coming from. They don't know how many wines have been changing hands. When they are changing hands, the temperature change with the transportations, etc., and then the wine quality may actually have gone bad. And that is why sometimes when we go to the restaurants, we have to taste the wine, smell the wine before be like, okay, let's do it, right? So for us, we work with, well, let's talk about one big problem first. I think in August, there's a Singaporean hedge fund that really focusing on wine investment, and the CEO actually invests 12 million of fake wine, and he flew back to Hong Kong for whatever reason, but Hong Kong and Singapore has a treaty, and then he got thrown back to Singapore for the court, whatever legal dispute. And that's one of the great examples that I always speak to people. But anyway, I don't want to go too deep to it. So we are actually tracking whether it's real or not, proof of provenance, have great relationship with producers, give access to our members to wine that they're usually not able to access in the world.
I'd like to continue and elaborate on this, related to the question that you've asked about which assets would be prime for tokenization. The way we see it is that any asset that produces good yield and has I would say, a known risk profile would be great for tokenization. And in this current case, maybe we could consider like tokenizing a vineyard directly. The way we would do things, instead of tokenizing the wine directly, the way we see things, because we focus on yield, would be tokenizing a vineyard. We would maybe acquire a vineyard and then issue a financial product collateralized by the land and the whole company operating, and using this as maybe we would see how much it yields. Let's say it yields 30%. We would set it at 20%. And well, in case we can't pay, you get a share of the company and the land operating that. And I think that anything that yields, especially something like a wine production facility, would be actually amazing for us. So even though today we do this with Bitcoin mines, because this is what we have expertise in and we know how to operate data centers and all that, we could very well be doing in this exact thing. That could be a pretty nice thing. Maybe you're convinced me to jump into the wine market, man. But that's the thing. So just to go back to your question, what we consider is interesting is, again, anything that yields, where we can assess the risk profile, and we can then create a financial product on top. And we're a regulated company, so we would do it with an ISIN and stuff like that. We would really go all the way in. But still, for us, it's about yield and is it auditable? Is it something that we can get Grant Thornton or PwC, assess that it exists, assess the veracity of it, and then for us, it's good to go on chain.
Following on the same theme, the most interesting asset I've seen on chain, maybe pairs well with wine, is Wagyu. So there's a blockchain company out of Vietnam bringing beef, so Japanese Wagyu, strains of Wagyu, from, I guess, birth, that's the way they track it, to slaughter. And there's all sorts of sustainability, traceability, authenticity standards for it, right? So excited to see, I think, a lot of the offline real-world assets, IRL, brought online digitally, right? And then you can do trading and all of that. So what I'm pushing for really is the Wagyu wine tasting next time we're together, right, on chain.
Sounds good.
Yeah, I'm in. Sounds great, actually. We're talking about how these assets can be tokenized. And Mark, you mentioned essentially having the ability to have established provenance, being able to track and trace materials. So, in that line of thought, in terms of real-world assets, is there anything else that we can derive, from basically any kind of other assets in terms of illiquid assets, for example? How can tokenization be used to improve liquidity and accessibility for, let's call it, traditionally illiquid assets?
I think there's two ways to look at it, right? There's assets that might not ever have to be liquid, but have benefits derived from tokenization. Typically, these are things you see in the supply chain, right? I think drugs and pharmaceuticals is a major area where tokenization benefits come from the authentication, production, aging, like all the metadata and attributes related to that asset, but it doesn't necessarily have to be traded, right? Just because it's on-chain and tokenized doesn't necessarily mean the end result has to be some sort of market maker deriving a yield, right? There's a lot of technical benefits of tokenizing things. I do think there's a lot of illiquid markets out there, right? Things that are traditionally done by humans, so auction houses, broker-dealer, agent relationships. You see a lot of this in high-value assets, right? Things that I think humans have a financial incentive to protect, and therefore they monetize their relationships. You could be an art dealer, a real estate agent, a watch dealer, a car dealer, right? And I think a lot of those markets you're going to see become disrupted or at least modernized by tokenization.
I think it's pretty interesting. Like, to me, to answer this question, you would have to look at why certain assets are not liquid. Very often it comes to the friction at the sale. So if it's difficult to exchange hands because there needs to be a notarial act or something like that, well, it can benefit from tokenization at liquidity. Like, it can get liquidity from tokenizations, like, but it would need some form of support from third-party entity, like a government, to accept the fact that, well, you own this token, you own this house, or you own this token, you own this thing. From the moment there is some form of support from an underlying, like a regulatory framework or some form of framework, then yeah, it can improve liquidity because it's easier to exchange a token than to exchange a lot of things. But it's not inherent to the point of tokenization. I think this is that's the way I would say it. We've seen examples of both sides. We've seen people trying to tokenize real estate and it did not improve liquidity, and we've seen people tokenize real estate where it did improve liquidity. So I think like the creation of liquidity is not inherent to tokenization. However, it is very clear that it can help. It's not a silver bullet towards liquidity. And I think that was the biggest reason for the flop of the real world assets until 2022. Like there has been a boom of RWA every bull run. People were saying, okay, now we're tokenizing real estate. Now we're tokenizing this. It didn't really work until people started to tokenize T-bills. And I think one of the reasons was that they were only focused on very illiquid assets. And they were focused on real estate mostly, whereas real estate is probably the hardest thing to tokenize because you need like a framework that will really be okay with whoever owns the deeds, whoever does this. Like, let's say you might have the right to hold a certain token on Ethereum, but you might not be able to redeem it later on because it will not like equate a notarial right, notarial act. So it's I think again it's not tokenization does not necessarily create that, but it can definitely help.
Yeah. Yeah, I agree with both of them. Personally, I really love real estate, but just like what you said, I have not seen any companies that have been successfully scaling it.
Yeah, scaling is the key. Exactly. It's always the same problem. We're actually working on that. It's a thing we can take off. One thing I wanted to add, we're talking about illiquid assets. Weirdly, the first thing you talked about was wine, and wine as illiquid asset was just sounding really weird. But yeah. Go on.
You want me to talk about wine?
So in terms of actually, you're talking about real estate, and I think I actually want to segue into, especially when it comes to real estate and these kind of assets, having that, I do think there is a need for, in terms of how it's being done right now, it's more of a centralized system, right? And so what do you think we need, especially to like for these kind of, let's call it a move forward, right? Like in terms of like a decentralized or a DeFi protocols that are needed to basically unlock these, let's call this tokenization mechanisms. Adrian, do you, yeah.
First of all, I think regulations needs to be loosened up, or hopefully there's no regulations at all. And I think if governments are actually going to step up for whatever we do and be supportive, just like US right now, that will help us as an industry to move forward way quicker and easier.
Yeah, that's an interesting point. In my opinion, like very often we think that it's all about tech. We need to get a better tech so we can do this. We need a better tech so we can do that. But well, this time the tech is here. We build the tech, and people have been building the tech for a while. We can tokenize and do pretty much everything. Of course, like maybe you would need a very nice set of smart contracts to enforce some form of constraint that would mimic the regulatory environment in which way something is tokenized. Let's say you're in a jurisdiction where the regulator has allowed you to tokenize something. If the regulator says, okay, you can only sell to someone who has done KYC and who is in like a, I don't know, a resident of so-and-so country and this and that, only those people can own houses here. And if you have a blockchain that has a set of smart contracts where, well, the tokens can only move into wallets or into other smart contracts that can prove that the owners, the final beneficiary, has gone through this set of challenges. I think you have everything, and everything I'm talking about today is something you can code in a weekend. So from a tech perspective, not much needs to happen. It's really about like aligning with the regulation. It's so far. Every type of regulatory progress we've made in crypto was coming from financial regulators. It was always about AML and KYC. It's always like and a little bit about the securities regulation. Like, okay, should we treat this as a security? Should we not? But if you talk about tokenization of things, then the regulator of those things have to be involved. So if you're talking real estate, it has to be the Department of Land or whatever. If you're talking like tokenization of a food supply chain, well, you might need the FDA on board or something like that. But it's if you don't have everybody in the house aligned, then regulation either needs to loosen up or it needs to be aligned. But policies are not in place. So to me, the only thing that needs is some alignment.
And I think the litmus test is how centralized and regulated that industry or asset class already is, right? And real estate, particularly residential real estate, at least in the United States, is incredibly fragmented, right? It's not a national regulated asset class. It's actually very much state and local. And a lot of it's paper-based, and a lot of it's hidden in city halls and property titles. And then a lot of the actual data is on site, right? It requires physical inspection, assessors. And so if you think about like the spectrum of asset classes that are out there, the ones that are most ripe for kind of tokenization likely already start looking like an NFT already, right? That's probably the easiest places to start to see adoption, as opposed to trying with the hardest, most complex, and most centralized asset classes, right?
I think that's pretty interesting. I didn't think about this before you bring this, but like there is an underlying primitive that we tend to keep in mind when we deal with assets on chain is that they will always remain the same. Like a Bitcoin today is the same as a Bitcoin tomorrow, no matter what. And an NFT, the JPEG of a monkey is going to be the JPEG of a monkey tomorrow. An apartment might be good today, might not be good tomorrow. Like you might have something that happened to your apartment and all that. So the only thing that, okay, you own it, but reflecting the condition and all that inside the asset will require a certain liquidity in the market for the market forces to align. And, well, it sounds like a hell lot of things to bring for it to work.
And it's same with wine, I'm sure, right? It's not a static asset class, right? It changes over time, transport, whether it's been opened or not, how much it's been in the sun, the temperature, humidity, all those things. So those are all, I think, chain-specific things that whoever is trying to tokenize that class has to build for. And then I think the fewer variables there are, then the easier it is, right, to tokenize.
It's another topic that we can actually go on offline, but we are working really hard on different ends like logistic, legal, producers. A lot of things that we need to work on in order to make things smoother for everyone. Not just the Web3 people, Web2 people, but everyone in the ecosystem.
No, actually, that's. Let me ask you, Adrian. Like, how, in terms of this tokenization, actually, I want to ask you specifically, like, how can tokenization actually enhance transparency and reduce fraud in asset ownership and transfer?
Yeah, that's a good one. Down to my alley, actually. So just to give you an example, we work with producers directly. So producers are going to ship the wine to us, and then we help them to tokenize it. So how does it work? So we put the NFC chips onto the bottles and have like the sealed label onto the neck. So you can actually scan the QR code or NFC chips to see when was it produced, when did it arrive to our warehouse, and when would it be shipped to our customers. So if you have a bottle right now, you can scan it. You can see, okay, well, this date it delivered to my place. Yeah, so it actually tracked the full cycles from the producers to the end users with the dates and everything as well. So that's one thing when it comes to, let's say, the supply chain. The second point is how can we prove that whether it's real or not? Is we actually put the label onto the neck, and then you can see if it is obviously open, then you can see that it's real. I mean, it's not real. And you may actually say, hey, what if there are some people who create the same label and just change the wine? That doesn't work for them because we have like the blockchain on it as well. So you can actually scan the label. You can see who was the creator of the NFTs. It will be us. So people who pretend to be us would not have the same contract ID as well as the username as us. Yep.
It's like a ether scan for wine. Right.
Correct.
That's pretty awesome. Yeah, it's pretty cool. I think like interestingly, you can have a bunch of sensors in your in the chips that you put on wine, so then you can actually even assess the temperatures the wine's been through and stuff like that. So then you can see, oh, this thing was clearly stored for 1 week in a too high temperature. It's probably not going to work, and you can store all that. That must be pretty cool. Yeah.
Yeah, I think in terms of that, let's talk about technology, actually. What do we think about, like, in terms of technological advancements are needed to facilitate? I think Adrian touched upon some of them, but basically, like, you know, what do you think are the technological, like, advancements that are needed for facilitating a widespread adoption? Not only, like, you know, let's call this, like, you know, how do we scale this? How do we bring this to market so that it is something that's accessible to everybody, not just for specific use cases, right? For real world asset tokenization.
I'd say, sorry, unless you, to me, again, like answer might sound a bit blunt, but from a general perspective, we already have everything we need. It's just for each vertical, there will be a set of tech or like a regulatory framework that needs to be developed. But from a general perspective, we have everything we need. Tech is not the bottleneck anymore, unless, especially in certain verticals, and which is why I think like the space is ripe for disruption. Now, like, it's great. You want to create like RWA about wine? Okay, you need to build tech specific for wine. It's not like you won't need to build great RWA tech. Like, I don't think we really need much more stuff in RWA. We have everything we need, in my opinion. And then maybe you wanted to do something private. You don't want people to know when you move those assets. It's not like ZK has not been around for a couple of years already. So we have everything, in my opinion. I mean, like we could do better, and there can always be better tech. But if you ask in terms of enablers are here.
Yeah, I agree. Like the fundamental building blocks are there, right? The notion of primary kind of smart contracts per chain, and more importantly, the developer and builder ecosystem that knows how to do it. I think the challenge is representing a lot of the contractual policy unique to that industry on chain, right? And that's specific, right? Doing liquidity pools and fractionalization for wine will be different than domains, will be different than your Bitcoin mines, right? The way you represent those financial yields are different. The integrations downstream to distribution are different. Like, do you want your wine NFTs on OpenSea, right? And then which wallets do you want them to be compatible with, right? I'm pretty sure Magic Eden does not have an asset class currently for wine that represents those things, right? So there is some technical negotiation that has to happen. But I agree, like, it's not like new things have to be, breakthroughs have to be invented. A lot of the hard work now involves people and policy and the actual the last mile kind of customization.
Yeah, I agree, both of you. I think tech is here, but I think one of the concerns to actually get to where we want to be when it comes to mass adoption, maybe it's not for everyone, but for the Web 2 people, I think security is a big issue. How can we educate them to be like, okay, not to click some funny links, right? And that's actually one of our main jobs in my protocol right now, because we have 8,000 Web2 users right now. To onboard them to our NFT marketplace, we need to educate them, have different articles, have dedicated customer support teams as well. And obviously this is not technical problems, but this is something that we are actively trying to problem solve.
Yeah, in terms of migrating Web 2 to Web 3, like I think one key piece I'd like to discuss is really just asset valuations and price discovery, right? Claude, would you like to
Sure.
talk about like, tokenization in terms of that?
Yeah, so I think it goes back to one of the points that we touched upon earlier when it came to liquidity. Like, if we are to believe how market forces work, the more liquid an asset, the more you are believed to, the more you have, the higher the chance to believe its price. Because, well, if people can transact easily, if they can have a lot of transactions, you have more chances that every transaction would be priced properly. Because it's not one person that was wrong, it's 1,000 people, it's 1,000,000 people. So if you increase liquidity, you could increase price discovery. It's just those things that flow together. Now, in practice, I think it tends to work pretty well. As soon as you increase liquidity, you can that. But given that crypto is still prone to market manipulation, just like any market, you could facilitate price discovery, but you could also facilitate price manipulation. Like today, you want to manipulate the price of some piece of art. You need to really go to Sotheby's, have a lot of people in bed with you, fake an auction. It's pretty painful. Now you put this on chain, throw in a couple people to pump something on a DEX, and wow, now this art piece is very expensive. So price discovery, yes. Price manipulation too. That depends on the guardrails you put yourself around the assets that you have. But clearly, it can help. It's very clear. You have to think about it in terms of what happens when you open floodgates. And, well, tokenization of real-world assets tends to do that. Now, it doesn't have to be. You can have a certain set of smart contracts that, as Mark was saying, mimics a certain set of policy, regulation, and all that, which would therefore make it more difficult to have an insane market. But yeah, it can facilitate price discovery for sure, just by effect of liquidity.
Yeah, actually, actually talking about the liquidity aspect of it, I'm going back to just the regulatory environment, which we've come to agree that basically has been very important. And now in terms of a framework, yeah, we can go DeFi, but basically we still need a regulatory framework. And I do think we're entering into an environment, especially in the United States, where the previous iterations of government have been around regulation by persecution, right? And we are coming into a government that is going to be, I do think, hopefully, set some guardrails, set some rules of the road in terms of what we can and should be doing regarding real world, basically asset tokenization, as well as basically I think we're coming into a very exciting time. So we are running short on time here. So I'd like to start from the end of the room over here with Mark in terms of closing thoughts.
Tokenize the world.
I love it. I love it. Absolutely.
Told you, catchphrases. This guy, the revolution will not be tokenized. Can do everything. No, so I would just say tokenization is not a silver bullet. It will help. It has helped, and it will. It helps. It has helped, and will keep helping a lot of use cases. But let's not just think that because something is tokenized, it will magically become liquid, become everything. So as always, do your own research. Do not buy anything just because it's tokenized. Do not buy a project just because it says it tokenizes stuff. Like, do your research, and tokenization will bring a lot of benefits to you.
Bullish.
What are your closing thoughts?
My closing thoughts are that I do think tokenization is an absolute necessity in terms of where my work is around carbon, like tokenizing, obviously something that I consider like doing good or sustainable, right? And how do you place a valuation around that? And the only way to do that is basically to tokenize it and to essentially democratize the access to it. So I do believe, like, you know, RWA like has a bright future, and I hope we're all along for the ride. Thank you, everyone.
Thank you so much.
Thanks, everybody.